So moving on, Range Undercut and Rally. This is for all the people who are complaining about stop hunters earlier. So a lot of people are going to place stops just below the range, and during a strong market, if that breaks, the stock's probably going to break down. But in a whippier market where there's less liquidity, whatever, you might have a lot more moves like this. So in markets that aren't like 2020, this might be the more logical entry tactic and stop loss combination to use. So here we've got an established range. It breaks below that range, stopping all these people out. Then it shows strength, rallies back through that low. You can enter right at that point. Place your stop loss at the low of the day or the low of this shakeout to that. And then, you've got an additional potential entry through the high of the range where, again, you can top off the position, or even if it does a mini range and continues to rally, you can add on a little bit here. But the key thing is here, we've got a range that's established, a move below that range, but an immediate reaction back through that range. And you can enter right at that point through these lows, set your stop here. This will often be very tight, often 2% even. And then again, it could form an outside day by breaking through these highs. That's an additional entry point, and you'd want to manage that accordingly with the stop. But this is really effective, and it's a great way to be at a profit immediately and know if you're right or wrong. If it struggles at these lows, that's not really what you're looking for. You're looking for an immediate push higher back into the range and continue momentum to the upside. The best result after a day opens, we break the low, these lows of the range, and we rally back up. The best result is we get an outside day closing right near highs on a pickup in volume. That suggests that there are real buyers behind this, and you've got a profit, and ideally you continue higher through this range. So this is a really effective setup that people can use on a larger time frame where you've got a weekly base forming. These are weekly lows. We get an undercut and rally back through that. That's what this is commonly called. The shakeout +3. This is also a version of this. You can use this on multiple time frames. I like it on a daily or intraday, but I'll use it in the context of a larger pattern like this. It's very fractal. So yeah, that's pretty much the setup. Ryan, anything to add on this?
Yeah,
Or
let's go over basically let's say you consolidate the lows, right? And you have a 20%, 20%, 20%. So you're accumulating shares versus a level. Now that level is broken. So you exit the position, right? That was your stop loss, you exit the position. You had 60% skin in the game and you came out on the losing side. So that's one losing trade that you had. Then you see this happen. And again, the primary pattern is intact, right?
Mhm.
What you and the entry tactic that you employed here failed because it could be a function of the market, it could be a function of news, could be a function of downgrades, etc., whatever the case might be. Broke it, you followed your sell rule and you lost out on that position. But when you see this happen, it takes a very long time for you to come to the terms that what happened here is not personal. And what's happening here is the fact that, it didn't work in this environment. It, took you out, but you have to enter back in. It takes a very long time to kind of master that and not be kind of a sore loser, basically. Don't be a sore loser when you have a losing trade and you say, hey, I'm never going to trade this name again. And then you see it double and triple all the way up. Have a way. So what I have is I call this the undercut, right? The undercut hold is what I framed it. Now you can name it any which way you want, but it's for me, it's a way, for me, it's a, just give me 1 second. Yeah. For me, it's a way of getting back into a name that shook me out, right? So now I have a entry tactic. That entry tactic fails, but I have another way of entering that stock in, right? So it's like a backup plan, right? I know this name is going to be a winner. I know that if the market is good and everything else lines up, I know that those things are going to result in this being a winner, right? If the market is under pressure, then I may be taken, I'm taken out of this. But I want to I want to corner this name after the primary trend is intact. I know I visualize this and my edge is there. So I'm all we're doing here, the difference between this and the difference between this is I have two different ways of maintaining a position into this name because my probabilities of this name doubling and tripling are really, really high. So that's all we're trying to say here. So I call this the undercut. If it holds for a few days versus the low, then I enter right here and then see how this rallies up and out. If this does a we, then I kind of enter a little bit at the top of this prior consolidation because I feel more comfortable here than I do here at that point. But I have different ways of finding my way into a winner. So
Yeah, and I'll add, on the weekly time frame, O'Neill again. This would be his shakeout. Oh, I'll go back. Yeah, this would be a shakeout +3. He would add more shares if he got shaken out because it's kind of reconfirmed the demand. And I do want to stress that you want to see kind of an immediate rally back up. You don't want to just be buying on a down day, down, 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 down. You want to buy on strength as it's showing you that it's recovering. Often, there'll be a gap down and then it rallies immediately. That's the kind of buying pressure that you want to work with. And we're getting into the weeds there. But this is kind of the overall concept that you should think about. And like Rye said, anticipation setup here failed. Your accumulation failed here. That's fine. If it sets up again and you like this entry tactic, you might not like this entry tactic. But if you do, you can use this to position that name again if you still deem that it's a high potential stock, a winner, the overall setup is invalid. But you don't just want to be buying a down day. I'm always waiting for strength and for it to prove itself by pushing back through that pivot.
and
I think
just a
that's key.
question for people in the chat, maybe if you guys can put it, what kind of I guess entry tactics you use right now, right? In terms of what do you have in your toolbox at the moment? So I think it would be really nice to see that. And what we're discussing here is just, this could be one way for you to do it, but it would be really nice to see what people are using today.
Yep. And here's an example with Nvidia a few weeks ago. It had a nice 4 or 5 day rally after this back to the highs of the base. But this is a 15-minute chart. We've got the tight range that forms. In the morning, we had a gap down. Immediately in that 15 minutes, it rallies back through the lows of that range. You could enter right here, or as it re-breaks out through this pivot, you could also enter there. And that's a way to, this tight range, a lot of people are watching that. There's a lot of stops here, stops at the low of the previous day as well. We take them all out and we see immediate response, higher volume pickup. So this is a real world application of this exact setup that you can see and study. So this
And
works quite well.
the
Yeah, go
way
ahead.
I would enter this is a little bit different. So the fact that we have a downtrend, right? And we see this break of this lower range, my eyes will go to 400. And I'll say, can I build a position versus 400 on this? The primary pattern's intact, it's above the 21 day, et cetera, et cetera, et cetera, right? All of that checks off. I would build a position versus 400 as close as so $2 on a $400 stock is less than, I don't know, 0.5%, right? So I can build a really good position. And then I would add at the top of this consolidation when it breaks. So that's my second add. Now it really gets going. So maybe I put a 30% position, then I top it off with another 30%. Maybe I don't have a full position. It doesn't have to be a full position all the time, right? And I'll have basically a 2/3 position versus my normal size I would have in a leader. I still make progress, right? It doesn't have to be perfect, but it's there. So this range breakout finds liquidity, reclaims people. You can enter here, you can enter here. There's two very valid ways of doing it. And then the third one for me would be like versus 400. So 20%, 20%, 20%. Maybe I get 60 or I can do 30, 30, 30. I get 90% of my full position and then we still see a rally. Again, primary patterns intact on the daily for you to even look at this and say that this is something that I'm watching for.
Exactly.
Yeah.
And getting back to the idea of the expectation breaker, the expectation when we gap down like this below a range is that we have a large distribution day where it follows through to the downside, volume picks up, short sellers are piling on, people who bought in this range are getting stopped out. The sentiment's very negative at that point. But some people step in, or big buyers step in here and accumulate. And there's an expectation breaker, a positive expectation breaker proven by the price action. And that's what all this is about, is looking for short-term expectation breakers that we can use to position in.